All roads lead to Allegro. Good afternoon, everyone. Today with my team, I would like to present our analysis and recommendation regarding Allegro. During the last year, people's lives all around the world have changed dramatically, shifting all their everyday activities into the online world, including shopping. We believe that this trend is here to stay, and that is why we issue a buy recommendation with a 12-month target price of 70.15 Polish zloty, representing almost 23% upside potential. Allegro is the leading shopping platform in Poland and one of the largest e-commerce websites in Europe. It is visited by over 20 million people each month who can buy different products from a variety of categories. Allegro Group's marketplace, together with Ceneo and eBilet, create a powerful trio that will continue to dynamically grow and develop new services in order to improve users' satisfaction. The group's effectiveness is proven by constantly growing revenues and outstanding EBITDA margin.
Our recommendation is based on three main pillars. The first is the market growth, in which Allegro has a dominant position. The second is business development, which currently includes technology and ESG, as well as warehouses and parcel lockers network in the future. The third is a good understanding of the competition and the appropriate approach to fight it successfully. And all of this is supported by outstanding financial performance, asset-light business model, and strong cash flow generation. Let's move on to the first pillar. Eastern Europe has the highest turnover growth rate and the lowest penetration shopping online, which implies enormous space for e-commerce development. What is more, Poland has a lower RPU than the European average, which creates another convergence potential. E-commerce's increasing importance in Polish retail was boosted by pandemic restrictions, which is reflected by high future market growth. Being a market leader, Allegro is also developing through brand awareness and a huge expansion to the B2B sector. The additional lockdown situation and market trends show that Allegro will be present in every retail segment, which will strengthen its prominent position.
Allegro started as a simple online C2C bazaar and quickly attracted 1 million customers, becoming a go-to platform. Currently, Allegro benefits from its leading position, which is reflected by a simple yet powerful flywheel effect. Large and loyal buyers base attracts many merchants. They establish the largest listing base, which creates the best offering and keeps the flywheel spinning. However, Allegro hasn't stopped there and make acquisitions to redirect more traffic. The launch of a subscription program tightened relationships with customers. Those add-ons consciously contribute to further flywheel acceleration. In the future, new projects in logistics and finance will strengthen the position of a go-to platform and make Allegro independent from third parties, therefore increasing control over user experience. Opportunistic M&As are also possible, arising from Allegro's ease to implement new solutions. Those initiatives are not only on paper. Future CapEx is expected to quickly translate into launch of projects already in development. Numbers confirm our positive qualitative analysis, which is reflected in rapidly increasing user base and the GMV. Still, possibility of growth exists, for example, in smart penetration, which in our opinion, market undervalues.
The third pillar supporting our recommendation is overvalued risk of competitors, especially Amazon, as it officially launched Polish website in March. Firstly, we analyzed offers for both buyers and merchants for leading players in Poland. In looking at buyers, Allegro leads in terms of average delivery time or by offering installment payments. Also, we believe that Smart offers what Poles really want: fast and free delivery for an affordable subscription price, whereas Amazon Prime, still not available in Poland, may be too expensive. Allegro also has better approach to merchants. It offers lower take rates and immediate settlements, whereas Amazon pays only once in 2 weeks. Secondly, digging deeper into Amazon's launch, we analyzed its entries in different markets and distinguished 4 scenarios in which Polish market clearly shows similarity with scenarios A and C. Poland has strong local player, such as on Dutch, Brazilian, or Turkish markets, and it's not threatened by Amazon's technological or customer experience improvement, such as in India. That is why we believe it will not gain a significant share of the Polish market. And converting what I've just said to stock prices, we observed that similarly to Poland, leading players of the scenario A and C markets reported significant price reductions. However, over the period of next 6 months, they regained the prices, reporting over 25% upsides. We conservatively believe that similarly, in 1 year, this will happen in Poland. Allegro investors will retrieve sentiment to the company. The third factor affecting Allegro competitors, especially AliExpress, is change in EU VAT regulations called e-commerce package. For now, in most countries of the EU, imported shipments of value under 22 euros are exempt from VAT. On July the 1st, the relief will be withdrawn in other European countries, imposing costs on foreign players, indirectly affecting product prices on the platforms. And on the top of three main pillars, our recommendation is supported by outstanding financial performance. Allegro adjusted EBITDA margin is and will be substantially higher comparing to major competitors. What is more, keeping in mind fast revenue growth, Allegro reduces its margin, accelerating the spinning flywheel. These will allow for future deleveraging, improving stability, and providing flexibility in new business initiatives.
We valued Allegro using a blended approach consisting of the CCA valuation and a DCF model. Our team arrived at a target price of 70.15 Polish zlotys, which represents almost 23% upside on the close price from the 16th of April. Our recommendation was tested against multiple methodologies, and almost all the most conservative scenarios represent an upside potential for an investor. Comparable companies' valuation resulted in 46.7 EV/EBITDA multiple, which was calculated by analyzing similar e-commerce marketplaces and supported by the regression analysis of forecasted EBITDA CAGR. Despite broad valuation ranges, R-squared of 0.92 indicates that the market should award companies with higher EBITDA growth like Allegro. In our DCF valuation, we have analyzed market conditions and cross-checked them with Allegro's assumptions. We have applied a 7.74 discount rate and a terminal value to EBITDA multiple of 13.9, which is currently the minimum multiple among the peer universe. The implied terminal growth rate equals 2.9%, which is similar to the Polish inflation target and the long-term GDP growth. Sensitivity analysis of valuation and business assumptions indicates an upside potential in almost all selected ranges, while our Monte Carlo simulation resulted in buy recommendation in 77% scenarios, which supports the correctness of our model. To challenge our valuation, we identified three risk categories. The most important one, market risk, then operational and regulatory risk. The most impactful and hardest to mitigate ones are the intensifying e-commerce battleground and the risk of reaching the glass ceiling. As we described before, we do believe that the market overvalues the competitor's risk. Therefore, we see this one as a potential price driver. The glass ceiling risk was estimated based on a cap regarding the maximum number of active buyers, which resulted in the expected negative impact on the stock price of 5.3%. Regulatory risks such as anti-monopoly and changing tax regulations are common across all e-commerce marketplaces, therefore they are already included in the company's beta. Allegro must face multiple operational risks, mostly related to maintaining its high reputation and avoiding capex overruns. However, they are all being reduced by Allegro's in-house initiatives, all of them piloted before implementation. Therefore, the probability of such scenarios is low, and the expected impact on the stock price is below 0.8%.
A growing number of investors today are incorporating ESG metrics into their capital allocation criteria. Therefore, we have decided to conduct an in-depth analysis that looks at how Allegro is incorporating sustainability into their business practices. In order to assess their performance, we have developed a framework focusing on four main pillars, which were then divided into more specific and quantitative core metrics. Next, we analyzed data from several different sources, such as the company's CSR report and financial statements. We have then assigned points based on company's performance. The company has overall achieved 8.58 points out of the 12 possible, which means that the overall performance is very good, yet with space for improvement in some areas. Such a high score contributes to a higher competitive advantage over Amazon, which has a bad reputation regarding the working conditions. The fact that Allegro engages in multiple social initiatives will attract millennial top talent for whom ESG factors are of special concern. What is more, it will over time have a positive impact on companies' financial results thanks to productivity uplift and cost reductions. Lastly, ESG investors are set to stay with a company for longer because they are more interested in what will happen during the next decade rather than the next quarter. To summarize, we base our buy recommendation of 70.15 Polish zloty on three main pillars, which are business model upside opportunities, supportive market tailwinds, and overvalued competition risk, all supported by companies' outstanding financial performance. Now that all the paths have been paved, we believe that it is clear to see why all roads lead to Allegro. Thank you for your attention, and now I would like to open the floor to any questions.
Thank you. Judges, please turn on your video. Stay muted unless you are speaking. I will start time as soon as the first judge utters the first word. Time will end at 10 minutes. Feel free to begin.
Thank you so much, team, for your presentation. I have a question on the impact on margins. As I understand, the company invests more into the smart and fulfillment centers. Can you walk me through as to what it actually means for their margins?
Sure. I may answer this question. Can you please display the appendix 47? Yes, as you can see, the current EBITDA margin is still decreasing from these high levels in 2019. It will probably decrease in the future due to a switch to a rather asset-heavy business model. However, we have to understand that the margin is not the most important thing when it comes to analyzing Allegro's business model. We should look on the EBITDA nominal value, which will increase on a double-digit basis in the midterm and in the long term, which supports the high Allegro's valuation.
Thank you very much. So my question is around a trend in the industry. So Amazon in many countries is moving to same-day shipping, even 4-hour shipping in certain regions, right? Mostly across Europe, it's next-day shipping. How do you see that impacting Allegro in the future if they move to sort of quicker shipping options for the clients?
Firstly, we need to take into consideration that current 12 fulfillment centers of Amazon that are located in Poland are mainly used to supply goods to the German market. Moreover, Allegro has got plans also to establish such fulfillment centers to be able to compete effectively, lower the costs per mile of goods delivered, and also lower the time needed to deliver goods by the merchants.
Can I ask, in terms of the penetration of online commerce, obviously there's been a transformational change in the last year with COVID. Do you think there's a risk that I suppose you're assuming that rate of transformation continues rather than it being really having boosted as a result of COVID and some pullback, or yeah? So can you talk about your assumptions on that? Is there a risk it won't go as you expect?
Sure, I may answer this question. Can you please display the appendix number 1? That is true. The COVID pandemics has boosted e-commerce market a lot. However, we do believe that Allegro benefited from the COVID-19 pandemics even more in terms of their revenue. That is caused by the fact that marketplaces grow faster. What is more, it was mainly driven by an increase in the GMV per active buyer, which we do believe is here to stay for the long run, because we see permanent changes in the customers' behavior, especially when it comes to how often do they buy products online and on the Allegro's platform, which translates into a huge increase in EBITDA.
Moreover, I can add that Allegro is the best positioned company on the Polish market due to its leadership stance, due to its well-established cooperation with both merchants and buyers, and it's ready to capture the greatest incremental value of the e-commerce market in Poland that will be generated in the future.
Yeah, what I would also like to add, if I may, we also cannot forget about this convergence potential to Western countries. So of course, COVID-19 had an impact, but we believe that there is still a room looking at Western countries which have much higher penetration rate when it comes to e-commerce.
Can you elaborate in more detail, please? What do you think distinguishes this company from other marketplace platforms, especially something like Amazon? I mean, from a consumer perspective, what makes it what sort of advantage do they have over Amazon, for example, on the short, and if you have or if you can predict on a longer term basis?
Yes, if we can go to appendix number 2 in the first column, Allegro's growth avenues. So firstly, what is important to understand is the powerful but simple Allegro flywheel effect. Allegro, due to its long and well-established position on the Polish market, built the largest merchant base, which creates the best offering and the best price and delivery options for the customers. And that makes this flywheel spinning and also attracts new merchants to enter the platform.
But aren't these also available on Amazon?
Okay, so I believe I may elaborate a little bit more on this side. So we can look at a little bit more complex comparison of all the major competitors of Allegro on the Polish market, and we can clearly see that, for example, Amazon does not offer for now Amazon Prime, but we still believe that in the longer term, even if they launch their subscription-based program, it's not going to beat Smart. Polish customers already use Netflix. They already use Spotify and other subscription-based programs, and Amazon Prime, which for sure will be more expensive, of course. It's not what Polish people will like, we believe, and Smart offers what Poles really want. So it fills the gap of this subscription program concerning e-commerce marketplace.
We have to also remember that the prices on Amazon are higher than on Allegro's, which is the most important factor when it comes to Polish customers at the moment.
Team, question from me, one more question. This is a recently IPO'd stock, so obviously lockdown periods is something to bear in mind. Is it like an overhang risk for the company?
So we do believe that it's not, let's say, a very big risk for the company. We saw on the market that the major PE investors, let me show the equity story here, that the major investors had a placement of Allegro shares, but we believe it only set a strong floor for the stock's price of 60 Polish zlotys, which was, we believe, on the discount, let's say, on the market.
So you mentioned that prices on Allegro are lower than Amazon, right? Does that mean the Allegro also passes on lower margin to the suppliers, or is it that they charge lower margins and shipping costs and so on?
Sure. Can you please display the appendix 56? Yeah, as you can see, we know that Amazon does not only sell the third-party products, but they also sell the first-party products, which Allegro's does not in such an extent. Amazon has much higher margins, both when it comes to take rates from the third party and when it comes to their own products. As you can see at the bottom of the screen, there's a chart where there were some analysis of the prices in those categories, and there are a lot higher than on the Allegro's platform, which we do believe will, as we can see by this Allegro Amazon searches in Google, will not translate into Amazon acquiring big share of Polish market.
Thank you.
You mentioned the potential changes to VAT. What impact is that likely to have, or is it just a bit of noise?
So Yeah, when it comes to VAT, we believe that it will greatly impact mainly AliExpress. So the new law which is about to be imposed actually puts VAT tax on all packages imported